Is financial independence possible if you have so much student loans that you feel like your head is going to explode? The answer to that question is yes. You can be financially independent one day, even if you have 3, 4, or 500,000 in student loans and you feel like you're never going to pay it off. But you have to take a very specific approach to it. Let's use an example. Let's say that we've got Sarah the veterinarian. She's got 300,000 of student loans and she makes 70,000 a year. And she's not wild about being a veterinarian, would maybe like to retire at 40 or 45 so that she has some time to travel the world and do her own thing. What Sarah could do is that $300,000 in student loans is probably going to result in a growing balance. She's going to pay a percentage of her income and it's going to grow. So let's say it grows to $500,000 after 20 years of payments on the pay-as-you-earn program. She would then have to pay $200,000 or so of taxes all at that one time. So Sarah knows that 10% of her income is going to go towards her student loans by the way the program is designed with these income-based programs in the United States. And then at the end of the period, she's going to have this $200,000 tax bomb to pay on her loans. If she wants to be financially independent, she needs 25 times her annual spending in a portfolio of assets. We typically say that's index funds for most people. So if she spent $40,000 a year, she needs $1 million in assets to afford to retire completely from her job. Maybe if she only needs a supplement to her income, maybe she only needs $20,000 from her investments a year to supplement a part-time job lifestyle, then she would only need $500,000 to produce $20,000 of income. On top of that, she needs to have the money set aside for this tax bomb to pay her big tax payment at the end when her loans are forgiven if she's working for a private sector employer. So in this case, Sarah would need to have basically $200,000 saved at the end of this. So say she had $100,000 saved today, that would almost certainly grow because of compounding to $200,000 at the end of her 20 years of loan payments. So if she had $100,000 to cover the tax bomb now, or at least a significant amount, then she would be good on the tax bomb. She wouldn't have to think about it anymore, because 10% of her income is just going to be taken regardless of what she's making. So the tax bomb is the thing she really has to worry about. Once she's got the tax bomb set aside, or the money that she expects will grow into what she needs for the tax bomb, in a brokerage account and index funds, then she can think, well, okay, now I need my separate bucket for being financially independent, not having to work. And after all, financial independence, what does that even mean? It just means being financially free from having to work and make a paycheck to just survive and make a living. So if she's already hit this level where she's got 100,000 or so in today's dollars that will grow into 200,000 for the tax bomb, the next thing she needs to do is try to aggressively save and invest to hit a large amount of assets where she could not have to worry about meeting her expenses. And let's pretend that Sarah's extremely frugal. The more frugal you are, the smaller the amount of money that you need to be financially independent, right? So I said you need $1 million to have 40,000 in income, and you only need 500,000 to have 20,000 in income. There's not a lot of people that'd be willing to live on 20,000 a year for their duration of their lives, but people can do it. There are people out there like Mr. Money Mustache and other people in the blogosphere that prove that you can live even with a family on a small amount of money as long as you've got a paid off house, for example, or a very cheap place to live. And so let's say that our veterinarian Sarah has her money set aside for the tax bomb, so she's got a frugal lifestyle, and she needs, let's say, 500,000 to be considered financially independent, or at least financially very, very secure, right? So then she would just want to try to save as much of her income as she could. Let's say 50% of her income she's saving. If she's doing that and she's putting it into retirement accounts and index funds and a brokerage account at Vanguard or a robo-advisor, and she's not carrying any credit card debt, doesn't have a big car payment, doesn't have a giant mortgage, she could actually be retired in her 40s. It is possible. It's not easy, but it's possible. If you have a smaller amount of student loans and you're trying to become financially independent, then perhaps if you owe less than 2 times your income, just refinance the loans at a site like ours that can get a cashback bonus and pay it off rapidly, and then focus your attention on the math to becoming financially independent. The point is that anybody can do this. Anybody can become financially independent, even if you're a chiropractor with 300,000 in debt, vet with 400,000, or a dentist with 500,000 in student loans, or a lawyer with 250,000. Regardless of what path that you're on, regardless of how much you owe, you can be financially independent, and that's really exciting. So if you're struggling to figure out how you could achieve financial independence in your own life if you owe more than 6 figures in student debt, contact me, Travis at studentloanplanner.com. Thanks.